Welcome back to Financially Free with Latoya and Tracy, the podcast where your journey to financial freedom starts here together. I'm your host, Latoya, and today we're tackling a topic that can hit anyone, anytime. What to do when your income stops, is on pause, or suddenly drops. Whether it's a layoff, reduced hours, or an unexpected life event. Losing income can feel like the rug has been pulled from under you. But here's the good news. There are clear, practical steps you can take to protect yourself, your assets, and your credit, even during tough times. Start with what's most important. When your income takes a hit, the first step is simple, but it's not always easy. Focus on your necessities. That means your food, housing, utilities, transportation, medical needs, and your insurance. These are your essentials, your foundation. Everything else can probably wait. This is the time to cut back on extras, the streaming services, takeout, or non essential subscriptions. It's not forever, it's just for now until your financial situation stabilizes. Next, protect what you've built. Protect your assets and your credit. Even if your income is paused or reduced, do your best to make the minimum payments on your account. Why? Because staying current helps keep your credit score intact. And that credit history, that is your financial reputation. And it will help you bounce back faster when things improve. If you're struggling to make payments, don't hide from your creditors. Call them. Most lenders have hardship programs that can temporarily lower your payments, reduce interest, or even pause them without damaging your credit. Ask about loan modification programs, payment deferrals or forbearance options, temporary reductions in minimum payments. Remember, your lenders would rather work with you than lose your account entirely. And why does this matter? Avoiding damaging your credit during hard times it isn't about pride or numbers on a report. It's about positioning yourself for recovery. Let me say that again. Avoiding damage to your credit during hard times isn't just about pride or numbers on a report. It's about positioning yourself for recovery. When you start earning again, having good credit can help you qualify for better housing, lower interest rates, or even new business opportunities. So think of protecting your credit now as an investment in your future stability. And we all know there are many reasons, income loss happens. Let's take a step back and look at why income loss happens. Because understanding the why helps you plan for the what now. Income loss can come from a few main areas. It could be job related, economic, personal, or business factors. For example, job related causes. Maybe you faced a layoff or termination due to a company downsizing or restructuring. Sometimes it's reduced hours or a pay cut during the tight economic times that can create this situation. Then there are big picture economic or market factors such as recessions, industry declines, automation, or inflation that's eating away at your real income. So, we've seen how global events like the pandemic can disrupt entire industries. So, be mindful of some of the circumstances and the reasons for loss of income. And personal reasons too. Family circumstances. Life happens. It could be health issues, becoming a caregiver or caregiving responsibilities, going out on leave can take you out of your work temporarily. Divorce, separation, or the loss of a partner can create sudden income gaps. And if you're self employed, you know how unpredictable cash flow can be. Sometimes losing clients, facing late payments, or dealing with the market saturation can all mean sudden dips in income. No matter what caused your income to drop, remember this: you're not powerless. You can take control by focusing on what you can manage right now, protecting your essentials, communicating with your creditors, and planning for recovery. And when the storm passes, because it will, you will be much stronger. You will be in a much stronger position to rebuild thanks to the smart steps you took today. Here are some things just to keep in mind, some things that you can do when your income stops or drop. Focus on necessities. Prioritize, again, just your essentials. Protect your credit and your assets. Make your minimum payments on all of your accounts. Staying current helps your credit history. Contact your lenders and creditors early. Be proactive rather than reactive. Ask about the hardship or forbearance programs, loan modification options, temporary payment reductions. Avoid taking on new debt unless it's absolutely necessary. And then communicate with others. Ask for help. Call your mortgage company, your bank, credit card company, utility providers. Many offer short-term relief programs. Explore available public assistance, unemployment benefits, family leave support, local rent or utility aid programs, or if there's any opportunity for food assistance. And understand the causes and plan accordingly. Income loss can come from many different sources. And prepare for recovery. Review and update your budget monthly. Once your income resumes, rebuild your savings. Aim for 3 to 6 months of expenses. Check your credit to ensure hardship arrangements didn't cause any errors. And continue your smart financial habits. Pay your bills on time. Spend mindfully and plan ahead. Remember, financial setbacks are temporary. Your discipline and communication today can protect your future tomorrow. Your discipline and communication today can protect your future tomorrow. Take small steps. Be consistent, and don't be afraid to ask for help. If this episode helped you, please subscribe, leave a review, and share it with friends or anyone who might be going through a tough financial moment. Thank you for listening, and I'll catch you on the next episode. Have an amazing day. Thank you.